Today, we're diving into the pretty wild world of AI in stock trading. Is it a powerful co-pilot that can help you navigate the markets? Or is it more like a ghost in the machine, making moves we can't fully understand or control? Let's get into it. All right, let's kick things off with a number that'll really make you think. 89%. That's right. According to recent data, AI-driven algorithms are now behind almost 89% of all global trading. This isn't some far-off prediction, you guys. This is happening right now. So, to wrap our heads around all this, here's how we're going to break it down. We'll look at how AI is taking over, peek inside the AI brain, check out the tools you can actually use, weigh the pros and cons, and finally, tackle the really big questions this tech brings up. Okay, first up, AI's takeover of trading. And look, this isn't just for massive hedge funds on Wall Street anymore. This technology is everywhere, including right on the apps on your phone. So, what even is AI trading? Well, we're talking about some seriously smart tech, like machine learning, that can analyze millions of data points in the blink of an eye. And this is key. It's not just automating simple tasks. The AI is making intelligent, data-driven decisions on its own, adapting to crazy market swings, and actually learning from its wins and losses over time. So, how in the world do these things actually work? Let's pop the hood and see what's really going on inside the AI's brain. You can really boil it down to a four-step process. First, it's all about data collection. The AI just inhales information, not just stock prices, but news, reports, even what people are saying on social media. Then comes data processing, where it cleans up all that messy info and figures out what it all means. Step 3 is model training. This is where it looks back at history to find tiny, subtle patterns that came right before a big market move. And finally, prediction and execution. It takes a guess at what's next and can pull the trigger on a trade all by itself. And the really modern systems, they're way more sophisticated, working on 4 different layers. They start with massive data ingestion, and that includes what they call alternative data, things like satellite images of retail parking lots to see how busy stores are. Then they use advanced pattern recognition to find connections a human would just never spot. After that, they run thousands of simulations to find the strategies that can survive a market crash. And finally, it's all about high-speed, automated execution to place the trades instantly. Now, all this amazing technology isn't just locked away in some Wall Street basement. It's created a whole ecosystem of tools that bring this power to pretty much every type of trader. Let's look at a few. The variety here is just incredible. If you're a technical chartist who loves looking at graphs, a tool like TrendSpider can do all that analysis for you automatically. If you're someone who doesn't want to code, Capitalize.ai is amazing. You literally just type in plain English, if Apple crosses its 200-day average, buy. And poof, it builds the trading bot for you. And if you're more of a hands-off passive investor, something like AllGoes1 uses generative AI to manage a whole portfolio for you. And of course, there's crypto, where the markets never sleep. That space has its own special tools. Platforms like 3 let you run bots across a bunch of different exchanges, while Pionex builds the bots right into the exchange itself for nearly instantaneous trades. But, and this is a big but, with all this power comes some serious risk. This technology is a classic double-edged sword. It offers these incredible benefits, but it also brings a whole new set of dangers to the table. Let's really weigh the promise against the peril here. On one hand, you get emotion-free trading, no more fear or greed messing with your decisions. You get superhuman speed, acting on news in milliseconds, and you get a system that can watch thousands of assets 24/7. But here's the flip side. You've got the black box problem, where even the people who built the AI might not know why it made a certain trade. There's the risk of overfitting, where a model gets so good at predicting the past that it totally fails when something new happens. And the whole thing can be technically fragile. One broken connection could lead to massive losses. And it is so important to have a dose of reality here. As one developer, Ryan O'Connell, said after building his own bot, this is not a magic money printing machine. A lot of these tools are still experimental. Human strategy and oversight, yeah, they're still absolutely essential. Okay, this brings us to our final and maybe the most important part of our conversation, the ghost in the machine. Because beyond just making or losing money, AI trading forces us to ask some really critical questions. The thing is, the rise of AI in finance is creating challenges that go way beyond just normal financial rules. The speed, the scale, and the independence of these systems are pushing us into a whole new territory of ethics and risk.
The World Economic Forum put it perfectly. They said the ethical questions are just as big and important as the technology itself. We're now having to think about things like fairness, privacy, and who's accountable when an algorithm gets it wrong.
Experts have kind of boiled these risks down to two main themes. First is data input and design. And AI is only as smart as the data you feed it. So if that historical data has flaws or biases in it, the AI can actually make those biases worse, leading to unfair results. And the second is understanding and control. It's that black box problem again. If an AI does something harmful, we might not be able to figure out why, which makes it incredibly hard to fix or even control. So, in response to this, there's a huge push in the industry for something called explainable AI, or XAI. The whole goal is to build AI systems where the decision-making process isn't a total mystery, so a human can actually understand the logic behind what the AI is doing. And that, ultimately, brings it all back to the human element. Success in this new era probably won't just be about having the fastest algorithm. It's going to belong to the investor who can figure out how to best combine the raw power of the machine with their own unique human insight and judgment. This approach actually has a name: hybrid intelligence. It's all about creating a partnership. You let the machine do what it does best, crunching massive amounts of data at insane speeds, but you keep a human in the driver's seat for the things machines just can't do yet, like understanding the bigger economic picture, deciding how much risk to take on, and making those final ethical calls. Which leaves us with the one big question every investor has to ask themselves. Is this technology going to be your trusted co-pilot, helping you see further and fly higher? Or will it become a ghost in your machine, operating on a logic you can't see, can't control, and can't understand? That choice is really going to define the future of trading.